Alright, let's dive into something that's been catching my eye lately, the New Zealand dollar, or as it's affectionately called, the Kiwi. Now, you might be thinking, why should I care about the Kiwi? But here's the thing, it's not just about New Zealand. What makes this really interesting is how the Kiwi acts as a barometer for global risk sentiment, especially when it comes to China. And right now, there's a lot going on that's keeping traders on their toes. So, here's the hook. Despite weaker than expected Chinese PMI data, the Kiwi is holding its ground near 0.5900 against the US dollar. Personally, I think this resilience is fascinating because it suggests that traders are looking beyond the immediate headlines. China's PMI dropped to 50.9 in July, which is below the consensus of 51.5. Now, you'd expect this to weigh on the Kiwi, given that China is New Zealand's biggest trading partner. But here's where it gets intriguing, the Kiwi isn't budging. What this really suggests is that the market might be pricing in other factors, like the potential for progress in US-Iran talks or the upcoming US ISM Manufacturing PMI data. It's like the Kiwi is saying, yeah, China's data is weak, but let's see what else is on the horizon. From my perspective, this raises a deeper question. How much does the Kiwi's performance reflect broader market sentiment versus its own domestic fundamentals? One thing that immediately stands out is the hawkish shift in New Zealand's rate expectations. The swaps curve is now pricing in 60 basis points of hikes by year-end, with a total of 100 basis points over the next 12 months. That's near the top of the RBNZ's estimated neutral range. What many people don't realize is that this isn't just about inflation, it's also about the strength of New Zealand's economy. High dairy prices, for instance, are boosting export income, which is a big deal for a country where dairy is the main export. So, even if China's economy is slowing, New Zealand's domestic strength might be enough to keep the Kiwi afloat. But let's take a step back and think about it. How sustainable is this? If you look at the bigger picture, the Kiwi is a classic risk-on currency. When investors are optimistic, they pile into higher-yielding assets like the Kiwi. But during times of uncertainty, they tend to flee to safe havens like the US dollar. Right now, the US-Iran situation is a wild card. Trump's announcement of new talks could ease tensions, which would be good for risk sentiment and the Kiwi. But Iranian officials are pushing back, calling Trump's claims a new lie. This kind of back-and-forth creates volatility, and it's something traders are watching closely. Personally, I think the Kiwi's resilience might be tested if tensions escalate. A detail I find fascinating is how the Kiwi's performance ties into the broader narrative of central bank policies. The RBNZ is walking a tightrope here. On one hand, they need to keep inflation in check, which might mean more aggressive rate hikes. On the other hand, they don't want to choke off economic growth. What this implies is that the Kiwi's fate isn't just tied to global events, it's also about how effectively the RBNZ navigates these challenges. If they get it right, the Kiwi could continue to outperform. But if they misstep, it could be a different story. So, where does this leave us? In my opinion, the Kiwi's current strength is a reflection of both its domestic resilience and the market's cautious optimism. But it's also a reminder of how interconnected global markets are. China's slowdown, US-Iran tensions, and New Zealand's monetary policy, all of these factors are in play. What makes the Kiwi such a compelling currency to watch is how it synthesizes these elements. It's not just about one thing, it's about the interplay of multiple forces. And that, to me, is what makes this story so interesting. As we wrap up, I'll leave you with this thought: how much longer can the Kiwi hold its ground? Is its resilience a sign of strength, or is it just a temporary reprieve before the tides turn? Personally, I think the next few weeks will be crucial. Keep an eye on those US-Iran talks, the upcoming PMI data, and any signals from the RBNZ. Because in the world of Forex, nothing stays still for long. What do you think? Let me know in the comments below. I'd love to hear your take on where the Kiwi is headed.